Hey, what's up, everybody? Welcome to another session that I'm hosting here. Um, let's give it a few minutes to see who joins us tonight for this session. Hope you all been having a great week. I missed last Thursday, but um, I hope you guys had a great trading session too, for sure. It's been a crazy month, and it's probably gonna get even crazier before the end of the year. Uh, this Q4 is always a good session, a good quarter for making some good gains. I know for sure Q4 is always my most active trading uh, time of the year. I probably do 80 between 80 and 90% of my trades in the Q4. The rest of the year is just me sitting on positions and just seeing where they go. So, for sure, let me know if you guys are pretty active too in Q4 and how active versus the rest of the year. I know, hopefully you guys have been making some pretty good gains. Since I like to be on the sell side of options, I know I've been making some pretty quick turnaround times for my positions. I think I can get one or anywhere between 2 to 3 off a week. So it compounds pretty fast when you're receiving a credit every time. All right, I got a decent amount of people watching, so I'm gonna just begin. So we'll jump right into it. Going into SPY. Talk about SPY first as our index. We always want to look at see what's going on. So SPY is still um, holding its gain. We saw it tumble a little bit, but it since bounced up. So we might want to see if this right here is a new support. Let's draw this out. We'll dive right down into the hourly. So you can see um, daily, right? Looks like a new support is formed here. We saw the bounce here. Weekly. Weekly over here, we see it holding its top here. It still looks like it could tumble down, but we'll see where it goes as we get closer to Q1 of 2020. Um, I still think it could pull back more. Just from the look of it, what has happened last week hasn't. It isn't even a small blimp in it. I think a pull back down to the 400 level is it's expected or it could be coming in the future. Even if we look on the monthly here, right? The monthly, this chart right here, looks like we definitely have had a slowdown, right? So here we're going back to slowdown. So if we do tumble, 400 would just be like right here, very small blip in it. A trace back to 330 could happen in near future. So we pull up the monthly chart and we look at it. So definitely super high off of the 50 moving average, this purple line here. And usually when I see it this high up, it usually returns. We go back through the chart pattern of SPY in the past, we're definitely building towards something. I know everybody's on edge thinking, a crash might happen in 2020. What's gonna happen then? You know, and I definitely see people's fear, especially we're looking at the monthly. We're really extended, overextended almost. From our 50s. Usually, when that has happened, we see a crash like this. So I don't know when the crash is coming, but hey, we gotta prepare for it. Especially with markets being at these levels, you don't want to lose all your gains. We'll dive right down into the hourly. Oh, it's 5 minutes. Make this the max. Okay. So just looking at the hourly, we definitely see that bounce. So this is our new support line that we drew just earlier, right here. And we're thinking that this is a support level. Now, I'm curious to see how often we're going to hold it because we're still not out of the woods, even though we saw a bounce off the support level. And one thing to keep in mind is that we want to see it take out these highs again, right? We want to see it take out these highs again. If you're in a shorter term swing, if it's bouncing off of this 50, you can still play it but play with a stop. Don't just get in there and just because I said, oh, the 50 is good place to enter, you're just gonna enter with no risk management in it. Still gotta enter with a stop, still enter with some risk management. But it definitely looks like it's forming another leg up, but and this is where it could bounce from. So if it continues this pattern again, right? A continuation pattern where it does the same thing before, where it broke character here, but it's gonna go right back and try to continue that move by going up and then bouncing off the 50 again. So you can see here, right? This the extension of this move here, right? This broke pattern for a little bit, but it found some support, new support, and it could continue this pattern. So the pattern of bouncing off the 50 every time it bounces off the 50, another entry signal for you guys here, right? You enter, you set a stop down here below the 50, just in case it reverses like here. It breaks this pattern, then you're out safely. You lose a little bit, but hopefully you win more because for every time that it breaks out here, it breaks down below here, you probably have 2 or 3 times that you've caught it down here. So for the shorter term people, that's what you could look for. Right. So spies looking like it's on the leg, another leg up. Curious to see where it is. So we can even draw another resistance level right here. So as we approach this 470 level, let's see what it does. Um, because if we go back to the daily, right, we could see it. It's a more zoom out of the hourly. So what we could see is the two new lines that we drew, right? Two new support and resistance line. And I'm curious to see what it does for the rest of the year. Because if it's just my thinking, if we don't bounce break this level, we could probably stay in this zone for a bit. We could just bounce it between here until the end of the year. 2020 to the start of that year, we could see it try to break higher. Um, but we got to be very careful because as we go into February and March, February is usually a red month. Just what I've noticed. And March is also a red month too. So February, March, April of a year is usually when the market likes to go down, and then market goes and consolidates for a little bit before they eventually go back up again. So and just to verify that, see this right here. This is February, March of this year, right? Went up, hit a peak, then we came down, consolidated for a few months, all the way until April, right? Beginning of April, and then we start going up again, right? So this period of time. So we're something like that could happen. So we could fall back down here. This is where I said, the 450 level, 400 possibly. Right? If we have something that's big coming. Right? And we hop right back. We hop into Tesla from here. And Tesla has, we drew this last Tuesday and it's still following it. I said Tesla has broken its trend, right? It's broken its trend and it's been keeping here. Today was the first day it violated the 1000 level and still doesn't look good for anybody who's thinking about longing Tesla. I wouldn't do that just yet. There hasn't been a trend change. It's still close below 1000 today, right? Actually closed just above 1000 and then after market went below 1000 again. So we're still not safely out of the woods. This is still a bearish pattern. They're still going down. We haven't found a support yet. We thought that this 1000 level could be support, but it's really flirting with it. It still could be, but my eyes are peeled on this this level right here, the 900. So on the hourly, this is what it looks like. You see we're heading down and we're forming this pattern. This is the first time touch of it going back up to the 50 using 50 as resistance. The second time here and down, right? So one of the things to be aware of if you're playing Tesla, right? Still a healthy move. I think if we come back down here, we can still continue up. Right? Somebody wants me to take a look at DraftKings. Yeah, we could take a look at it from the little emoji that you added. I don't think it's good. I haven't been following DraftKings, but on the daily, definitely it looks pretty bad. Um, if we're drawing support levels out, let me get a chart of the 2 years. Right. So support and resistance wise, we say this is a resistance support area right here. Right. It goes back and it's something that's been tested. 1, 2, 3, 4 times. This was the breakout test. It didn't make it. Breakout here, came back, tested, broke through, but came back up, right? So support area is right at a support area. Curious to see what it does around this, right? Around this 40 level. We can even say that 60 is probably a resistance area, even though we have points of the year that it broke above 60. And this is why I'm using 60 because yes, we have had times where it broke above 60 here, right? You see these three peaks, the head and shoulders. It broke above 60, but it could not keep it. Right. So I'm more inclined to say 60 is a better resistance to look out for because as it approaches 60 next time, you see how the last time it tested was pretty weak. We want to see if it goes up to 60 and breaks above, or it just goes almost to 60 and comes back down. Because if that happens, we could be playing in this range for a while. But for right now, the struggle and the challenge is it holding 40. So if it can hold 40, I think we could be safe. Just how it lines up on the weekly. So we just drew that. So how this lines up on the weekly, you see the weekly 200 right here, right? Well, you can also see the supports right here, right? So right now it's not looking so good because it's a pretty strong candle. It's literally 3 weeks red, a week of neutral here, but overall, it's a few weeks of just coming down. So we're hopefully it's like this. We'll see a reverse like this right here, and this could be your signal to get in. right? So wait for a week where you see it's a green week, right? You might think, oh, a week is too much time, but you want to wait a week just so that you know it's safe that it can hold its price, right? So something like this, right? So this right here on the weekly, let me make this bigger. So you see this right here? It's right here, right? So you see it holding this level. Then you can get in, set a stop somewhere down here, and then you ride it to the upside, right? You ride it to the upside. So you're waiting for something like this. I don't know if you got in already. If you got in already, maybe hopefully you got a place, stop in place. Hopefully, you have a strategy for getting out if the trade goes too much against you. Okay, so when you're trading, you sometimes you will have losses. It's up to you to decide how much you lose. You want to lose too much because you want your portfolio to consistently grow. Okay. So for DraftKings, that's what I see. This is the areas that you have to pay attention to, especially we're looking at a area that's been support before. We're approaching that with DraftKings, and you want to see if it holds. So this week might not be the week to get in. You might want to wait another week. And the bad thing about next week, the bad thing about next week is that next week we're going into Thanksgiving. So the 25th to 26th are closed market days. So next week we only have the 22nd, 23rd, and 24th that are trading days. You want to be very careful. You don't want to get stuck in that in a new trade going into a 5-day weekend because on the 29th when the market opens, it could be significantly low or it could be significantly high, and we never know. So we don't want to put ourselves into that situation. So you might want to hold off, 2 weeks until I would even say you hold off until the 29th before you possibly open a position, just to be on the safe side. So the 29th, we go into December. December is usually a pretty good month too. But looking at this, it could go lower. So just stay safe. So that's DraftKings. So somebody also asked for INDI. I don't know what that is. So let's take a look at it. The semiconductor. Pretty new stock. So new stocks like this, it's really hard to analyze because we don't really have too much to go on off of the monthly. We don't have too much to go off of the weekly. So these two charts become junk to us because there is no formation of anything. It's just way too new of a stock for us. So we're gonna be forced to just pay attention to the daily and anything lower, right? The daily, the 4 hour, right? The daily, the 4 hour, and the 1 hour, right? So the daily, this is what the daily looks like. And it's showing this pattern of every time it's coming to its 50 moving average here, it's bouncing up. And it since this is a really, really sharp incline or deep incline, but the price increase pretty significantly, right? 7%. That's a pretty big jump. Um in the immediate future, I would probably even think that it's gonna come back down. Well, we'll have to look at the 4 hour, right? So you see this pattern that it's been forming, just every time it gets up to here and it just bounces and then boom, just out of nowhere, it just jumps. So, wait for for it to come back to the 50, see if it holds. If it does hold, you could get in maybe for another ride. Maybe the next run up will be even crazier than this one. But also be careful because where we see run ups like this, it usually means that people are paying more attention to it, right? There's more volume. You can see the volume peak here. So you can see every time that it formed this pattern, the volume wasn't that much, but as people start to notice it more, right, the volume keeps picking up, and that's what spurs this burst here. So maybe when it comes out here, the volume goes even higher, or it matches this right here that we're seeing. So pay attention to that. There isn't too much data for this. It's IPO, so it's a recent IPO, so there's not too much to go off of. So, but pay attention to that. That's the formation that it's forming, and just go off of that. Okay. So the 50, watch the 50, and it could even go to the 200 because this pattern has violated this right here. But you can see the 50 is pretty reliable. The 200, if it goes below the 50, hold off and see if there's support at the 200. If there is, then you can get it. So right here, right? And you don't want to get down. You don't want to get into the stock at the bottom of the support, right? You don't want to bottom fish. You want to see that it holds it by holding. It comes to the bottom and it comes back up. Then it comes up again. It comes down again, and that's when you get in, right? You see it holding. You see it. It's it's not breaking through that support. Then you get in. So it's okay to be a little late. You don't want to be the in at the first sign of it being at this bottom here. Even though you can take a risk there, you probably most of the time you might get stopped out. So you want to see that it holds, and then you do your risk analysis. And you draw where you want to get out, and then you get in. Right, you get into your position, and then you hold it. So that's ND IND INDI. Okay, it's like an apple. Apple's been pretty boring lately, but man, there's just not much going on in Apple land. It's just been sideways. So when it's sideways like this, I like to keep an eye on it too, because we don't know how long it's gonna go. If it goes, even longer, if we stop looking at it, it might just be forming a breakout. Usually, when it does this, some kind of pattern like this, it's it's probably going into like consolidation. Nobody's really getting rid of it. Nobody's also really buying it to a significant amount. So we see it just bouncing back and forth. So at the bottom of this channel right here, down at the 140, it's a good area to pick up. And if you're playing the two channel right here, the top and the bottom, the 40 and the 40 and 140 and 150, you could play that back and forth. So try that out. There's not too much going on. Uh, but Apple's a solid hold. There's a dividend in it, um, premium in it. So if you have 100 shares, or if you're doing spreads, right now I would say it's perfect spread season because it's just bouncing back and forth. So you can get a at the bottom here, you can get a put spread out of the money here, stay pretty safe, and then up here you can probably get a call credit spread, right? For those who know what those are, you can play that back and forth, right? So range bound isn't necessarily bad. We can be in this range for another year, right? It's just like here. We broke up into a new range and then it just keep going like that. So it might just be stair stepping slowly. Um, that's that's Apple. MD. ND seems to be holding this level. So I know it has been climbing lately. But just know that this climb has had a year of consolidation, right? It was climbing, then it consolidated for a year, range bound for a year, then it breaks out, right? So it's not completely out of the blue. It actually had a formation of people holding it and supporting it for a while, right? A lot of Probably a lot of investors got in here. They were holding, so it's holding its price right now, and it's holding this 140 level. So it's been holding that for the last few days. You can see this could be if you're following, this could be an area to get into, right? You can see this the first lower high, or the first higher low. I mean, see, so low here, right? A higher low, and so we'll see what happens. Now this is forming some kind of a a pendant move or a pendant pattern right here. But if we see, so it looks like it could break out to one side or the other. Um, when you see a pendant like that, so this is let me draw it out for you guys. So move like this, right? Where making making both higher higher lows and lower highs. So when it gets tighter like this, it's gonna pick one side or the other. So you guys could decide how you want to do it. For me, since it's AMD and it's been moving pretty hot, I'll probably play more the, the chance that it's gonna go higher. But that's totally up to you. This pendant is pretty neutral. You know, you can choose one side or the other. But just me and just how the formation of the higher time frames of this chart, right? This stock, see the higher time frames there were going upwards. You know, I would think that it will probably do another leg up. This was a pretty sharp incline right here, but man, anything can happen this season. We can continue going higher, but just be careful. So both this is a neutral pattern on the hourly, meaning it could choose to break down or it could choose to break up. So you could just play one side, you know, playing the that it calls that it goes to the continues going higher, or you can play that it goes lower. It's totally up to you. For me personally, I would probably play more the long side, but I could see it also falling. So take that with a grain of salt. All right, let's look at PLTR. PLTR, for those who have been following it, PLTR has some promise. I definitely do like it for long term investment, especially since all the hype that we're hearing about it and just the business model that they're trying to do. So PLTR, and it's been channeling, right? It's been channeled for a year. This right here, I would just say this was due to hype. I wouldn't even consider that's real because they didn't hold it up above here, and it's been holding this channel for a while. So it's right at the bottom of the channel for anybody who likes to pick it up, right? I'm not saying you have to, you know, do your research before you do it, but it's right at the bottom of this channel that's been there for the better part of a year, right? A year and some months. So right at the bottom of this channel, so it'll probably be bouncing back and forth here, or go back up and try to retest and break above 28. This 27.50, 28 level. Uh, and if it can clearly break above it and with some strength and stay, it could be good. And the one thing that we do want to point out is that there has been a pickup in volume. So you can see volume's been pretty low, and then there's a spike here. Right? Probably coinciding with its earnings too. So it's after its earnings, you know, it had good earnings, but the guidance was bad. You know, people took bad on that guidance, which to keep in mind, like that guidance is more for if shorter term traders they pick up that something's bad about the guidance, they'll probably sell it off. Doesn't mean the stock is bad. You know, even good stocks have bad earnings or bad sentiments of their earnings, and they do go down for the short term. But definitely something that's worth picking up. Um, I wouldn't say risk all your money in it, but you know it's okay to risk some of it, especially it's at lows, the lows of the range right here. You could pick something up, you know, get a starter position, see where it goes. Um, so this is definitely a longer outplay. It's going to be long drawn. You know, uh, we want to see the volume start picking up again, like around here, right? Definitely, volume has been lower, and once volume gets picked up again, we could probably see it go for runs again. This runs like this. Right? So that's what we want to see. PLTR is right at the bottom of this range. Right, it's been sitting in this range from about 22 to 28. QS, it's been a crazy one. It's starting to pick up steam too, and definitely early. I don't believe it's late yet in the run, but it's wait for a pullback. I think a pullback could come back, right? It could come or a slowdown. So, on the daily, you could see, big spike up last year. This year, it just slowly died off, held the support level here, right? It held the support for a long time and it just took off from there, right? So and a spike in volume too. So this isn't with low volume. This spike up is with big volume, more volume than we've seen throughout the year. So, definitely look at that. This is definitely one that uh could go parabolic. And you can see on the hourly, it's been doing this pattern, right? So good pickup. I personally actually did play a call contract down here and I got out today. So I made 100% of my call contract just in this move. So if you guys play it, you could probably look at this 50. Yeah, right? Seems like it's holding it. This is a shorter term, a longer, a lower time frame. So it's a short term trade, right? You could play that and bounce of it, right? That bounce of it, right? Somebody wants me to look at GGPI. I don't know what GGPI is, and people are finding tickers all over the place. It's not bad, it's, it's tickers that I just don't know of. So let's see. Let's see. Let me just try to see who. So this is GGP GGPI. Definitely a pickup in volume right here. The last 2 days just spiked. I don't know what caused it. I don't if it's news related or something, but on the daily, it looks like it's pretty neutral. So it jumped up, and then people didn't know if they wanted to go up, continue going up, or continue going down. So there's not too much for me to really look at. The lower time frames, it looks like it was struggling here. Maybe if you're looking for a long, maybe at the 13 level here, right? It's 13 level, could bounce up. The pattern there, right? So it's respecting this 50. For something like this, just IPO probably a few months ago too. So there's not too much to go off of on data. I don't know what they do. It's a spec too, so even less known stuff. I don't know what company they are or what they're gonna merge into. So uh, if you do know whoever requests it, for sure let me know what it is. But it's a spec. So for these, if you don't really know what you're doing and you're just playing the patterns, I mean that's the best I can give you is that it's respecting the 50. Just play off the 50 hourly. Since speaking of volume, right, more people are keeping an eye on it. So maybe see if the 50 is gonna be holding in the future. If not, it might just be dead in the water. It might just not go anywhere. Uh, these specs, do be careful. Don't get caught up in the promise of it, because you don't know what's gonna happen to them yet, right? There's a lot of specs that came out last year that just die. One example, PaySafe, right? Whoever got caught in PaySafe, me, and I'll admit it was I was one of the guys who got caught in PaySafe, right? It could be a while before to do it because these are brand new. Even though they're not brand new companies, they are brand new stocks, right? That are coming out. People they haven't caught the attention of people yet, or they have many things that they have to figure out in their company. Guidance might be bad, things that need to be worked out. So, uh, if you're gonna play for long term, think 5, 10 years out. You're gonna play for the short term, play it only when there is volume in the stock. If you see that volume start to dry out, get out. You don't want to get stuck in it. These are these kind of stocks is the first one in and the first one out. It's not the first one in, the last one out. Because if you're the last one out, you're probably going to be stuck with a bag. It'll be bag holding. So definitely be careful with this. If you see the volume and you see it come down and it's forming this pattern of respecting the 50, continue to play the 50. But just do be careful because if it keeps going higher, it could get stopped out. Right. So let's look at AMC. I know a lot of you guys play AMC. Um, AMC's not completely dead yet, but definitely it is forming this shape right here, right? I would even say this is like a bull flag on the daily. Even it's getting closer to the end of it. Looks like it's trying to make up its mind if it's gonna take off or not. I wanted to see a few days ago. I wanted to see it when it was up here. I wanted to see it break here with some strength and then hold, because that would indicate to me that people are really believing in it again. People are really thinking that it's gonna have another run. They're gonna hold it. But even though it broke down, it wasn't significantly down. Still keeping this pattern, and it still could break up to the upside. But the scary thing is it's getting to the end of it, right? To the end of this, you see it's getting dried out. Volume was dying on it, so it's picking. It's either going to be picking one side or the other. Um, so hopefully you guys are who are holding shares of it um, have some safety net in place. 'Cause if it dies from here, it could be ugly. Meaning people get fed up of waiting and they say, I don't think this thing is gonna go up anywhere, and then they sell off, and you see a huge red, right? It just keeps going down more. Or people say, hey, that's it. I'm gonna buy more. I don't think it's gonna do anything anymore. Or I think this has been the bottom. And people keep buying into it and it keeps taking off. So that's AMC. Definitely some promise. I remember telling you guys about the same setup that I see AMC, AMC, and SoFi. But SoFi, the good thing about SoFi is it broke out and it stayed above. Right, we had one day where it finished below, but it came right back up, and I think this is a formation of it to go higher. Right, you can see the 50 is picking up again. Right, the 50 is picking up again. Right, that was that day right there. Would have probably been a good day to add. It's still pretty good to add to it. So this could be a new support right here. This right here, this 22 level. It's been holding above 22, which is very good. Earnings last week, which earnings was really good too. It definitely helped them out. SoFi, we're looking down at the hourly. Hourly looks ugly, but it actually confirms that support, right? This is where I told you it went through, but it went through and then earnings, boom, spiked it back up and it's holding again. So this level right here, this 22 level is holding again for anybody who is interested in playing SoFi. Now, uh, this stock is pretty new, right? It just IPO at the beginning of 2021. It's pretty crazy, meaning that, if it catches the right attention, right amount of attention from people who really believe in it, it's going to keep going. And we're going to see it's not going to be unheard of to see it go 10, 15, 20% a day, because a small stock like this, when they do catch attention, people really believe in it so low that, the pool of shares is so small that people are compete for it, right? They're going to compete for it. There's going to be scarcity of the stock that forces the price to move that much that fast. So if you're one of the earlier guys who got in down here, yeah, you're probably still holding on to really good gains, right? But if you're looking to get into it, I think it's a pretty good place right now. Good support area. It's been holding 22. So right now we're just waiting, buying time to see if when it's actually going to take off, right, to the upside. Okay. Another one that I want you guys to be aware of is space. Space is a pretty crazy stock. Whenever it runs, it takes off crazily. Now, I shared with you guys a few of the people uh, a crazy play that I had. So it's a debit spread, and we got it at the bottom of this at the bottom of this channel right here, right? So you can see on the daily, right? You can see that it's been channeling, it's been doing the same thing, done it a few times, right? Every time it comes down here to this 19 or even 15 zone here, it just takes off. And that pattern has been repeating itself ever since it came out, right? Ever since it came out in 2020. So it's been doing that. And I think something like that could happen again. It's not that it happened once, right? It happened one, two, three, right? Four times. So it could very well happen again. So I got a debit spread. And this is a crazy debit spread because it's actually all the way out to 2023, right? January. So the only thing that we're doing there, and it's actually really low risk. So for one of the contract was like 69 cents at the time of me opening it, but it has the potential to probably make around 380 back. So 69 cents, 69 cents or $69 risk and $380 max profit. And you open that position and it's all the way up to 2023. And the only thing that position has, or the only thing that it really asks for space to do is if it has another pop like this within the time from now all the way up to 2023, I think January 23rd or something like that. So this whole period right here, as long as we have one pop like that, so one pop to the $40 level will probably be good enough. You don't need to get the max profit, even though the max profit would be nice. Just on pop to 40 and then out. So any time between it. So that's a lot of time. It's probably like 14 months that we just have to wait. And hopefully a pop like this comes. Just one pop like this. So that's a play that you guys could probably do. I did share on my personal page, um, but I could probably share it again. I could even the simulated trade. All right here, right. So so right here, what we're doing is we're buying the 40 and we're selling the 50 strike. So buy the 40, sell the 50. So January 2023, right? So this position right here, and so I can show you guys the right. So here it is, the max. I have one. Right? Well, actually, I have 15, but this is for one. They're just showing for one. Right? Simulation for one, right? Maximum is around maximum 380, 400, right? But we're probably not going to hit there. But if price could get to 40, right, between now and April, or now in January, right, to 40, you could get some good reward back. So jump to mm, here, jump to April 4th. Right, goes to 40. This purple line represents what we're gonna get back. So it's just by April, make a good 200, almost 200 bucks off of it. So for a $69 risk for just one contract and you get 200 bucks back, that's a pretty good risk to reward. Especially it's not off of anything that is completely new. We've seen this happen multiple times with this stock with space. So the odds is, something could happen. If not, 69 bucks that we threw in it and to get a reward. So we're just buying time. So yeah, that's a play that you guys could do if you can afford the risk. So a good risk to reward based on something that has happened multiple times in the past. That could happen again. So definitely play it, or definitely think about it. See if it fits what your playing style is. Now, one thing I want to do this time that's a little bit different from every time that I started analyzing is I want to do something a little bit different. And I want to pick a what I thought of doing is picking a random date between today's date and 1999, right? With something within the last 20 years or 20-ish years. And let's try to simulate a trade or something, a trade that I would do. So hopefully you guys could follow along. We're going to use the on demand. So our random date is 2015 November 25th, right? So let's jump to that date. And let's find something to play, right? 2015 November 25th, right? So if you guys don't know about this feature, this is the on demand feature on This is the on-demand feature on Spy, not Spy, on Thinkorswim. It lets you relive old data as if it was live data, right? So you can go back. I think they have data up to like 20 years, uh, 20 years that you can look at. But let's look at it. Just see if we can simulate a trade, right? Right, with simulate a trade. You can see Spy back at this time. Spy was still in the 200 range, right? Look at Spy to know what's happening. Right, 2015. We're in 2015 now. Spy is just at the top, right? Looking similar to what it is right now. At the top, it's just something has happened, right? Something ugly has happened. And so Spy here. Right? I think even my watch list should be good to go too. So I have a few watch lists here that I have set up. These are my personal watch lists. Let's pick something to play. Something. Let's pick Walmart. Actually, let's not pick Walmart. Let's pick something else. Let's find something that I would play in real life. Right? Just looking at the charts. This is something that could show some promise. ABBV. I like the chart setup here on here. So we'll probably play this one. Let's add a simulated trade in. Right? So simulated trade. Right? Show the buying power, $100,000. Right? Simulated trade here. So we'll do our analysis, right? We'll do analysis for resistance. We'll find that out. Looks like it broke here, but it's forming a new pattern. Continuation on the daily. Support right here, right? Resistance right here. So it's sitting in somewhere between. So you can see, so this is a trace, right? So since this is a simulated trade, but our account has $100,000 buying power. We still want to do our risk analysis, right? Our risk analysis is telling us how much we want to buy, how much we can afford to buy, right? So based on this, I want to set a stop somewhere down here. I'm just going to buy shares just for the sake of for the sake of this example, and also for us to be able to keep right. So I'll set a stop somewhere down here at the below the gap, right? So 55. Right now, price is at 61. So bring out my calculator. Okay. Well, we want to know how much we can lose. I always want to only risk about 2% of my portfolio on any trade. So 2% I could risk $2,000. So right now it's sitting at 61. We want to set a stop at 55, right? So 61 minus 55, that's a $6 risk. So for our portfolio to risk $2,000, right? we can only buy about 333 shares safely, right? Say with a stop sitting at 55. So current market, right? We're gonna go and do a buy. So for I like round numbers, so we just go to 300 shares. Even though we can buy up to 333 shares for safety, right? $133, 330, 300 shares, right? 18 grand. So that's what it costs us. Monitor. Actually, did I? Oh, I set it. I had it set to a limit. Let me cancel replace. Let's just do it. Let's just do it to market so we get it because we don't care what price we got into it. We did our risk analysis for 61, so we have some buffer there. About 300 shares, right? 300 shares, you can see. So you can see it reflected in our price, our buying power, 81 right here. It's right here, right? So the good thing about on demand that what you guys could do is when you buy a position like that, you can step through the days. So you don't have to wait and see what it does, right? You don't have to wait and see what it does. It's ABBY. Okay. So we have a position, ABB, ABBV. So we're going to step it through, right? Go to that Friday. Let's see how it plays out. That Friday, you see, went down a little bit lower, not by much, up to the 30th, that Monday. Oh, $600 down. Our stop was down here, right? So we could probably even place it. I don't know if it's on demand will trigger it, but we can create a just create a order of a stop, right? So we get out at 55, right? And don't make it for a day. Make great good until cancel, right? Oh, I don't remember if on demand will trigger it, but we'll continue stepping through the days, right? We'll jump to the fourth. Oh, close to our stop, right? $1,000 down. But we have the good thing about this is we did our risk analysis, right? We know we can lose $2,000 safely. You know, just that's 2% of our account, $100,000 account. So $2,000 is barely anything. All right. So on the fourth, maybe we go to that Monday, see what it does, see if there's a reversal. So it's holding, right? It's holding, it's forming now that holding pattern. Jump to the 11th. Oh, and then I think we got taken out, right? So even though this isn't trade that we would have made money in, it just shows you that we need to have our stop in place and just play whatever we see, right? So I think the stop, yep, stop trigger, it got us out. So after everything, right? So we got out with a loss, but it was only a loss of $2,000. So that's one way that you can play, right? When you're trading, you have to know how much you're willing to lose. And just because you get stopped out in a trade doesn't mean that it's a bad stock because we don't know what's going to happen, right? So if you continue to follow it, right? Once you get stopped in, don't revenge trade. You want to wait a few days to see what it does, right? A few weeks. And if it's good, right? Like this right here, maybe it was just telling us, so we jumped another week ahead, right? But we see that, the stock actually, bounced back up from there, right? So this could definitely be a support. Maybe our support here was or our stop was too shallow for it, right? So we go to the 25th, the week of the 25th. Let's see what it does. See, so it continue up. So if you see something like that, right? It could be telling you, hey, maybe get in again, right? So we go to the 28th. Let's buy another position. Let's do the same thing again. right? We have so right now we took a loss before. We have $98,000, right? Nice round numbers. Let's do it again. Okay, let's take another 2%. So roughly $2,000 again, right? We'll round up. Uh, but we'll set another stop. This time maybe we set a stop down here at 50 below here. So 53 or even 52.50 just to be safe because we know that we could go down even deeper, right? So current price is 59 minus 52.50, 650, right? So we'll do 2000 again. 50, 200 divided by 650, right? So we'll get another 300 shares, right? Do that by market 300, right? Order place. We have a position. And we can go right ahead, set the stop. Go to cancel, set the stop at 50. You take the emotion out of it. You just say you stop. Whenever that stop triggers, you get out. If ends or but. Sucks to lose money, but hey, man, we need to be non-emotional. Actually, this is wrong. Cancel replace. Should have been 52. Okay. Okay, 52.50. Okay. So let's go. Let's step to the first week. Let's see what it does again. All right. Stepped out a week. Still sitting there. Another week. The 22nd. So another week, you see. Oh, this would have taken us out back here. So we placed that trade 28th. Right? So this right here, the 13th would have taken us out. So I think since we hopped forward in time, the stop didn't trigger. Right. So you can see that what this is showing us is that how when we form these ranges, right, it could stay here. It could form a new support, right? Right here is showing you that it's forming some new support here, right? So if we were in a position, we would have eaten 2 losses. This would have taken a loss here, right? But if it's a stock that you definitely done your research on and believe that it could hold itself in the future, you might want to take multiple losses on it. And that's okay. You know, you take multiple losses on it, right? So that was a trigger, right? So this time we saw that a few times down here. And we see it every time we see it down here, we see it bounce back up, right? So maybe follow it, continue to follow it for a few weeks, see what it does. Right. So we go, this is in March. We go to the middle of March, right? So you see it tighten, right? So I bet you in the next few days, we're going to see it come back down to this support level. And maybe then, right, it'd be a good time to get in again, right? Let's step out another day. Let's go to the 24th. So it's really tightening right here. But since I got stopped out 2 times already, 2% already, I'll hold off. Right? Continue to watch it to see what it does. So it's forming some sort of, it's tightening up right here. At this point, I very well might just take a position here. See, so you see, I got stopped out once here. I got stopped out once here, and I got stopped out here. I got two times, right? But I continue watching it. I think this is a stock that is pretty good. I want to continue playing it for a breakout, right? Um, so as it's getting tight here, let's take a position. I think this is good time to take a position. Looks good on that, right? We don't know what's gonna play out in the future, so and this is completely new stock to me too. So this is, we can take a position here. I haven't played this stock before, so this is an example completely new to me. Um, let's take it again, right? Our money is still relatively the same, so we could probably still afford 300 shares. We'll put 300 shares at the uh 300 shares, right? So about but we'll put a stop down at 51 this time. 51, just right below here. Right? Roughly $2,000 if we lose, or if we go even deeper, right? We can go 51. Let's go 50. Let's just go flat 50. So we have our position, right? We create our stop order. Let's just say 50, just to keep everything nice. Cancel. All right, meaning it's gonna be good for like the next 30 days. So, all right, let's step through it again. Let's go a week out, see how it performs. Oh, and guess what? It's doing great, right? A week out and it's climbing. So this is good. Yeah, we try to bottom fish it. It goes to 61. It's 61 now. We bought it at 70, so we're up, right? So that's good, right? Exciting. We see a breakout here. All right, we continue to stay in that position. Now, at this point, since it climbed up, you could update your stop. You could put it here, but if it depends on how long you're gonna stay in that trade. Because if you want to stay in the trade for a few months or a few years, you might not want to set a stop yet or update your stop yet. But if you're in there for a short swing, you probably bring up your stop just to keep your gains. But since whenever I place a trade, I always want to hold it for a long time. I'm gonna see how long we can go, how much gains we can get. So you can see we opened this at 57. Right now it's at 61.50. Keeping $1,000. We took two losses already. 2,000, so $4,000 that were down. It was a $1,000 up, right? Take that all into account. Go another week out to see how it does. Another week. We're still in the 160s, right? Still some good gains. Stop didn't get hit. Let's go out to May. First week of May, May 6th. See how it does. Oh, it's still going. Still going strong. Right? $62 now. Right here. So our losses, right? Total loss. I don't know if this is total loss. I don't know if we can get it to show total loss, but right here where this is our gain, 1600, right? But this is looking good for us. The trade has finally turned in our favor, and we took two losses on it, and we're going to continue to see. This is a shakeout you see here, right? So if you didn't play with a stop, you would have gotten scared here. So you can see, step out through this again, continue, go to June, and it keeps going higher. Oh man, this is crazy. 64, right? 64, 65, $2,000. Man, we already won back one of our losses. All right, that's good. Let's continue to see where it goes from there. The 24th. Let's see where the 24th goes. All right, 24th, we slid down a little bit. Nothing to worry about. Let's go to the 30th, June 30th. All right, still hovering. Nothing to really worry about. A little down a little bit, but we're still good. Still green. Let's go to July 8th. Right, testing it out. July 15th. July 22nd. Hovering, you can see. It's crazy. 66, right? $2,600. So we have actually caught a trade, a really good trade that just multiple months in the forming, right? Multiple weeks. And this is one trade that we kept continue to our we had our eyes on. We just kept watching it. So you can see it's still going. It's going in our favor. We caught a good trend. We kept our eyes on it. We kept our eyes on the support and resistance level, and it just kept going, right? It's forming a new pattern. Right. Let's jump to the 19th. Right. Now that we caught a good trade, we could jump two weeks at a time now. Right. Just to see how it played out. Still good, right? Let's go to September 9th. September 9th had a little drawdown. We're still up on the position. So good, nothing to worry about. All right, slow down here. So at this point, we might want to consider moving our stop up to like right here. That's one way to play it. So we're this data. So we might want to start a stop here, but that's really up to you, personal preference. For me personally, if I get into a long-term trade like this, I say I want to hold it for as long as it goes. If it comes back and I lose, I lose. But if it continues going, I think it. So for this sake, we'll play my style. I'll continue holding just to see what happens. October, right? Still sitting on some gains. We haven't done anything. Just let our money work for us. Right. Let's go to November 18th. Right. November 18th. See, we had a crazy time here, but we didn't get spooked. Money's still there. Gain's still there. December. All right, December. So you see that another year, basically another year is done. January. All right, January still holding tight. Now let's go off February. Nothing happened in February. March. It's climbing again. Back in March. Let's see if we can have another run. Let's see if we can go into a time when it starts running again. All right. It looks like it's running again, right? And the whole time we're sitting in that position. See, that position is just making us money. Definite definition of making your money work for you instead of you working for it. Right? So you got stopped out twice. We're still sitting in it. It's still making us gains, right? $2,000. So Let's just jump to July, or actually, let's just jump to November, right? Since we already planned that we're gonna hold it, I don't think it's gonna reverse anytime soon. Holy crap! And in November, it just kept going. So you can see we jumped up, and this position has made us $11,000. We made up our all of our loss, our $4,000 loss, and guess what? We just held it through the whole time. So you held it. You saw a good position. You held it, and it kept going. Our stop never got hit. We're still holding it. $11,000 up, right? Well, completely up. We let's minus our $4,000 that we took loss on. We're still up on that position, right? We're in it for like a year, about a year now, year and some months, right? Let's continue seeing where it goes from there. Right? Let's go to April of 2008. And I believe we opened this in 2015. Right? Took a small hit. It was still small here, but we're still up huge. So look at this. In January or February, hit its peak of uh of 125. So let's go back to that time. Let's see how much it was worth. This is still worth $10,000, right? So at its peak in February, let's see how much it was worth. February 5th, right? Let's go there. Let's take a look at it. So it's at its peak. Let's wait for everything to load. Almost $20,000. Holy crap. Crazy. Crazy play. All right, let's go to the end of the year of this one, right? So you can see this was a trade, a multiple year trade that we took. We took two losses initially, two losses for us to get into the position. And when we did get into the position, we held it for multiple years, and it just kept producing money. And if you don't need the money, you just leave it in there, right? You leave it in that position, it continues to make you money. It goes up, down, up and down some, and never touch our original stop loss. Right? Our initial stop loss is still down to $50. Right now it's sitting at 80, right? So we just keep going. All right, let's jump to the end of the year of 2019. Let's see how it did. All right, 2019. All right, 20th. Oh, it almost got stopped out, but look, it never did. It reverses again, and we're still holding it. So the whole time, let's see, we 2019, we had a rough year. 2019 just kept going through it, but we're still holding. We're still holding onto some money. The whole time, we're not paying tax on any of the gains, so that's good. If you didn't need the money, right? All right, let's jump to the end of 2020 to see what it did. 2020, and it's up in the 90s again, right? So you can see it's pretty stable stock, pretty stable stock. And this was just a stock, a random stock that I picked to do this example on. Random stock. I have never played this stock before, right? Just picked it off of my watch list, right? My scanner watch list, and I played it. I played it how I would, using the on demand. We can forward through time. We played it through some of the rough times, played it through some of the really good times, right? And this was just something that you buy and hold. You get stopped out. You get stopped out initially in the beginning, trying to get into position, but you can see, right? Every single year, it just kept producing, right? There has been points. Its peak at uh, 125, right? So let's jump to. Actually, that was 2019. Let's jump to November 2020. November 2020 is going. It's up in the 100s again. All right, position's still good, still very good. 20 grand. It's still pre buffering. 13 grand, right? Right. So this is just one way of doing it. It's just one position. Imagine having multiple positions like it, where you're just basically sitting in the position, just monitoring what you do. And since you have multiple of 100 shares, you can actually employ even more strategies to it. You do cover costs against your shares, your 300 strikes, right? Every month, collect some premium every month, some rent payment for having your money be locked up in it. Definitely, if you see a fall like this coming, you can hedge it so that you can keep more of your gains, and every time it goes back up, you make even more gains. So there's multiple tools that you can employ to it, but this was just an example of picking, picking a stock, picking a good trade that you can stay with multiple years, right? We see we started this in 2015, right? I started my random date, picked a random date in the last 20 years, 2015, and then we walked through how many losses we had, how many losses we had to try and get it, right? $4,000 loss. Now it's sitting at 17, almost 18 grand. So we made about 14 grand out of it, right? Stayed in it multiple years. Now, if you can employ things like being able to write options for, you probably make even more, right? But this is just for that stock holding. So, you know, eh, hopefully this helps you guys especially all the beginners of when you're playing. Don't be discouraged by the losses or the planned losses, right? So this example, I wanted to show you guys that, hey, you are going to take some losses whenever you want to get into a position, and it's okay to take losses. Just keep in mind that you're planning for the future, right? And you want to lose it small enough to where um, it doesn't completely destroy your account, and eventually in the future you'll make back those losses and some, right? So you stay ahead, right? So hopefully this has helped you guys. I just wanted to do something new, something that's different, to show you guys more of what I do as a trader, and this is how I employ more strategies that, just a basic strategy that what I do. Hopefully this is helpful for you guys, and hopefully you guys like it. Feel free to leave it in the comments if you do, and if it's helpful for you, because I do want to improve. I do want to make this content, these sessions better for you guys. So feel free to leave me a comment saying if this is something that's nice, is this something that's good, or if I should just stick with the analyzing some charts and then ending it at the hour. But feel free to let me know in the comments. Leave me some comments, leave me some reviews, leave me some pointers of what I can do better. And let's improve this for everybody. So I'm gonna end it here, and hopefully you guys enjoyed it. Hopefully it's been helpful for you guys. Um, have a good week, and continue making some gains. Thank you, everybody. Have a good night.